Well, everybody, I'm Cantonese Cat. Everybody, Cantonese Cat here. Oh my, economic data. So scary, so freaky. The whole stock market runs on these economic data. They're extremely delayed. That gets revised all the time, and they get fudged based on multiple factors. And there are a lot of narratives that are going into it on a big economic data release like today. Going to try to eat your shorts, going to try to eat your calls, going to try to get rid of your leverage position, hit your stop loss, whatnot, right? It's so scary. Look at it. Oh my God. Core CPI, 3.3%. CPI year to year, 2.4% as opposed to 2.3%. As expected, even though it went down from 2.5. You have some totally fudged, jobless claim numbers that have gone up. You have some continuing job loss claim that's also gone up. Yeah, I think honestly, I really don't care. You know who else don't care about all these data? The market. And there's a lot of kind of initial scares at the beginning, but I really do know that the market really doesn't give a crap because you just look at the bond market, the 10-year yield. What happened? Nothing. Nothing happened with the 10-year yield. Guess what happened after the Fed had announced a 50 point or basis point rate cut? The 10-year yield went up by a lot. For the month, I think it went up close to about let's see, I want to say it's like close to about, almost close to about like 40 basis points. So the Fed cuts, but 10-year went up, right? What gives? Well, because of technicals, because the yields based on real market condition, based on how availability of liquidity is available, all of these are really more or less set by the market. It's not really set by the Fed. The market tried to anticipate what the Fed is doing, and they're usually ahead of the curve. But really, what you're seeing here is that yields, the 10-year had plummeted from 5% to like 3.6%. It was just a little bit too far, too fast because it's just gotten way too far, way too fast, and it was retracing back to the mean. And where's the mean right now? It's around 4%. That's exactly what it's doing. Came back down a little bit, way too far, way too fast. Came back down to a bearish back test here at the 20-month moving average. It's probably going to end up getting rejected here. It's probably going to end up going down a lot further. But yeah, you know what that means. Probably going to be good things for like small caps and things like that. Also, look at the monthly Ichimoku. You are also getting rejected here at the red line over here. I don't know if you can see it. But the Kijun is also right there, and you're also getting rejected from that. You're about to have a bearish cross over here. The 2-year already had a bearish cross. You already had a relatively weak, 2-year yield. The yield curve, an inversion had already happened, and the market hasn't crashed so far. I wonder what that means. They said that it happens every time. Like 50% of the time, it works 100% of the time, or something like that. So far, it hasn't really worked out that way, has it? Right. So what are we talking about here? The 2-year yield has just gone down way too far, way too fast on the weekly here, and it just bounced. It wants to maybe retrace a little bit back to the mean here. And you can see also the monthly Bollinger Band has just gone way too far, way too fast. Closed last month outside the lower Bollinger Band. It's just had a big bounce. These are technical bounces. I don't think that the 2-year is going to go way up again just because CPI was like 2.4% instead of 2.3% as expected, right? Global liquidity is rising. U.S. continues to print money. I think we only had the data here through August, but quantitative easing has begun since October 2023. So what does it mean for the market? Well, for the market, I think really what it means is maybe it's time to be a little bit more risk on, right? So if you're talking about a little bit risk on, you're really talking about what's going to be what the market's going to pay attention to is going to be the IWM, because that really, the small cap is really the backbone of the American economy. And if there's increasing in global liquidity, which there is, if I can pull this up here, if there's increase in global liquidity, what you're going to end up seeing is that stocks that are embedded into the IWM, the Russell 2000 in the small caps, it's just going to do extremely well. Just look at this Gann square. I think that this is like 720 and 1. Look at how much market symmetry there is. And there really is just been going through cycle after cycle after cycle. Every single cycle it hits a resistance level above, came back tested a support level down below, and we're just basically doing the same thing over and over again. And right now, we have gotten over this horizontal level over here. We've back tested it twice already, but I think this one has to back test it again, go back to like the 212 level, which is the 0.618 Fibonacci, by the way, which is a very, very important level. If he was able to find 0.618 and is able to push a bit against the 0.786, then we moon from here. It's going to go to 300 if it does that. Sorry, I don't usually become that deterministic, but I just feel very, very strongly about it. I could be completely wrong, but that's kind of what I'm seeing, right? And that also goes along with what I've been looking at in terms of cycles as well, because if you're looking at the cycle analysis here, you can see that pretty much you've had about 3 cycles or 4 cycles before, ever since the great financial crisis has ended. Each cycle bounced from the cloud here on the monthly, and it went up a lot higher after that. We've bounced from the cloud, and we could potentially go up a lot higher after that. It's just been consolidating sideways, form a little bit of a bull flag. You also have the bullish Tenkan Kitchen cross that had already happened. Each time when that happened, the stock market happened, go up a lot higher, right? With the exception that this happened over here, but then COVID hit and you have a plummeting market here. But for the most part, if you follow cycle analysis, that's generally what happens, right? And if I can, I really wish to pull up the M2 liquidity index, but I can't today. The internet's a little bit shot, but that's okay. I just want to show you that I think things are going through cycles, and I think that it might just be the beginning of the IWM to run up a lot higher over the next 12 to 18 months. Stanley Druckenmiller is positioned that way. I'm positioned that way. You just had the broadening of the Tenkan Kitchen right here, kind of like here, kind of like here, kind of like here. It could run up for a lot longer, and it could run up higher than a lot of people would expect. Even if the IWM just goes up around 10 to 20%, if it pushes its all-time high, a lot of the more risk-on assets, they're going to do some pretty remarkable things. Like, it's not even funny in terms of what could potentially happen if IWM just goes up a lot higher from here. It can get very risk-on very quickly. And I mean very risk-on very quickly over the next 12 to 18 months. I could be wrong, right? I could be wrong. None of this is deterministic, but I'm positioned this way. Obviously, I'm not all into anything crazy, but if the market is that scary, how come Cloudflare, which is a very, very supposedly very overvalued stock, which I have a position in, by the way, had gone up like more than 8% today? How come CrowdStrike, that had been significantly deleveraged and came back and back tested the leading span A, the bottom of the immature cloud over here, and found support, and it just went up a lot higher and reclaimed the Tenkan here again and went up about 5% today? If it's really that scary, if all the economic data, if we really go into recession, then why am I seeing the things that I'm seeing? I don't know. Maybe the things I'm seeing are completely biased, maybe I'm wrong, but I just wanted to kind of share my thoughts to let you guys know what I think, what my opinion is. And it's just one cat's opinion. It probably doesn't matter. But I think they're doing more and more shakeout, and I think that they've been getting a lot of people really frustrated with this shop over here that has been ongoing for about 3 months now. Everybody's super jaded because they just don't think IWM is going to go a lot higher. But what is so jaded about this over here? You're basically consolidating sideways here in a little bit of a ascending triangle. And you're flipping some positive support here. You got the Tenkan here rising up, and you got the 20-week moving average here rising up, right? So I really am very bullish on IWM. So because of how bullish I am, that means it's going down. Just kidding, or maybe not. I don't know. But I'm very bullish on this, and because I'm bullish on IWM, I'm also bullish on Bitcoin as well as a surrogate, if you will. I am really seeing that this is Bitcoin up top here. This is IWM, Russell 2000 down here below the small cap index. Both of these are forming big giant cups, and both of these are forming big giant handles over here, and it's getting ready to break out potentially. I think that if IWM does well, Bitcoin's going to do well too. That's just kind of how they've generally gone over the years. I'm going to zoom out here. And a lot of people say that the the Bitcoin is more correlated with the QQQ or Nasdaq. I don't think so. I really think that is really sensitive to global liquidity, is really sensitive to rates and economic cycle, and because of that, I think it's most correlated with the IWM over time, because it goes through very, very similar cycles as the IWM. Anyway, 10-minute talk. Just want to get something off my chest. You guys have a good one. Bye.